But it's been a crazy week. I'm going to be in Cooperstown all day tomorrow. I have three showings, and each of the showings take like an hour and a half because we walk the property. We're going
It's a big
inside.
property, isn't it? Yeah.
Yeah, we're looking in cabins. I'm answering a ton of questions. And I was talking to a realtor today who's in Jackson, New York. She's got a client that wants to go see it, and she's had her license since. At first, she was talking to me for a long time, but it's sort of like, you're talking to people and you're like, we've been doing this for so long. And then they start saying things and you're like, oh, and I just say, how long have you been in real estate? Since December.
All
Oh,
right.
okay, well, welcome.
Well, been there, right?
Well, welcome to the mayhem. Matt Tonkin, by the way, Maple Tree Funding, Janet Glaude from Howard Hanna Real Estate Services, and we are. What are we? This
Where
is
are we?
lowdown. That's what I wanted to say. This
This
is
is the
the
lowdown.
lowdown on the market in the capital region. And this is episode
Four,
4.
four, I
I'm going to have to start using two hands soon.
think.
You know
This
what's
is
so great
fun.
about YouTube? And I want to say, if you guys want to watch this live, you got to go to my Facebook personal profile page, which is just facebook.com Janet Glaude. You can come and watch us live. We go every other week. So the next time we'll go live is April 4th. And it's at 3 p.m. Eastern Standard Time.
Be there or don't.
Right. You're going to miss out on all the fun. So anyway, so last episode we were talking about the buyer process, and I labeled it like part 1 because I feel like there's so much for us to unpack. And what I want
Endless.
to say, if you have lending questions, Matt is the guy really to talk to. We've been doing business together for forever. Long time now, 10 years or something
Long
like that.
time.
Long time.
Long time.
Been long time.
Yeah.
So anyway, he's the guy to contact, and I want to say thank you so much for doing that conference call with my new clients, the Wexlers, who are first-time home buyers, and they're not ready yet, right? We're starting to get them ready, and sometimes that's a really good idea if you're thinking about buying. You should reach out to us. Me and Matt, we don't charge anything for that consultation, just to give information and knowledge. And there's many of our clients that really do it a year beforehand, so they're ready to go on their timeline, right? And it's a big plan,
Yeah.
it's a very expensive purchase, and you really need to know what you're doing. I did just
Like I
get,
said, there's a lot of steps in the process. You got to, if you don't know the roadmap, you got to take a look at it and, see where to start, you know, talk
yes,
to somebody, me or somebody else, and preferably me, but, you know, get educated on the process, where you stand, where you're trying to get to, right?
right. And if you're somebody that's going to go to, I'm not going to say any companies, but if you're going to an online lender, an out of area lender, and you're saying you're just going to use the listing agent, not a buyer's agent, I'm going to say buyer beware because no one is looking out for your best interests.
Right.
That's
Especially
really
the first time home buyer, right?
right. Who does not know
You,
anything.
you're winging it. You read everything, watched everything on the internet, and
And
your brain's
right,
swimming in Google because it's the internet's great, but there's so much out there, and you really never know. Might
right.
not be accurate, might be accurate, but not for the right loan product for you, or not specific for first time home buyer. So
Exactly, because usually when you're dealing with an online lender, it's usually AI.
a lot of it, yeah. And you never know sometimes, if you don't have a trained eye, AI is everywhere.
Exactly. And if you're using somebody that's not local, the practices in every different, I mean, just in New York State alone, like I said, I was talking to that other agent and we're the same and we have one board that's the same. And then she's in two different ones and I'm in two different ones. And we were just laughing because New York State, depending on what region you're in, the standards of practice are completely different.
Right?
You
Yeah, and
could
the cost too.
binders or you're filling out contracts or you're doing inspections way before you do a contract. It's
Yeah.
just different. You always have to know the standard practice.
Upstate, downstate, entirely different, you know,
Oh,
crazy.
totally different. Even Western New York, totally different than North
Oh,
New York.
yeah.
Totally. And so, anyway, so I want to start at the basics. And so last week was sort of like a brief overview to sort of get the ball rolling. And so this week, I want to talk about the different types of mortgages that are out there. And so, first, my first question to you, Mr. Tonkin, are you ready to buzz your buzzer? I should have got a fake buzzer next time. What's the difference between a fixed rate and an adjustable rate mortgage?
Yeah. Well, fixed rate, you know, pretty straightforward. Interest rate is set and does not change over the course of the loan, whether it's a 10-year, 30-year, anything. It would be the same if you kept the mortgage the whole time, right? So that's it. Adjustable rate mortgage, there's a variety of different, you know, uh, fixed terms on those. So it's fixed for the first, 3, 5, or 7, or sometimes 10 years. And then after that fixed period, it can adjust for the remainder of the term. So an adjustable rate mortgage is based on a 30-year schedule. Just the interest rate is fixed for that first, 5 to 10 years, whatever it is, and then it can adjust depending on the, what the lender is offering. It can adjust maybe every 6 months, maybe every 12 months, up to a certain amount. There's a cap on how much it can adjust up and down. And then, if you refinance or sell the property, you don't have to worry about it anymore. A lot of people, well, not everybody, some people want to go that route with the adjustable because sometimes it's a lower fixed rate for the first period compared to a 30-year fixed, for example. And there might not be there in that house or keep that house for anything longer than that fixed period of time, right? So maybe it's a short-term house. They're going to be there for 3 years. So they go with a 5-year adjustable, because it's fixed for that first 5 years, lower interest rate. Then it can adjust. So, if you're there for longer, it can adjust up, it can adjust down. So sometimes they're a useful tool when rates are going down. Or, if they're going down after that fixed period, you can ride the interest rate down, but then it, go up too. So, pretty straightforward, but
When do
technical things.
when would you say, and just so everybody knows, you've heard those terms, 5-year ARM or 10-year ARM. Those are adjustable rate mortgages. And when would you suggest someone doing that? When they might want to consider doing something like that?
When you are comfortable with the potential for them to adjust up, right? Because when your interest rate adjusts, your monthly payment's going to go up. And, if you had an adjustable rate, before interest rates went, up, 3 years ago, whatever it was, and you got into that adjustment period, your monthly payment could have went from, or your interest rate could have went from 3% to, 4% overnight. And then the following year it could be 5%, whatever the adjustment terms were. So you got to be, comfortable with the potential that you might be in that loan for the entire length of it.
Right.
With the potential that the monthly payment could go up to a certain, maximum.
Right. Right.
$1,000 different at some point. So,
And so it sounds like that
if you
would be
like
really-
security, you want to go with a fixed payment if you're going to be there a long time. You can't sleep at night if if the potential is the interest rate to go up if you're not okay with that. So,
good advice. Question 2. Just getting warmed up, buddy. You're just
give you a
getting
shorter answer on this one.
shorter answer. Now, when I feel like your time's up, I'll just raise my hand.
Okay, buzz me out.
All right, buzz. Can you explain what an FHA loan is and who it's good for?
Yeah, FHA. So FHA is essentially it's a government sponsored or insured mortgage product for anybody. It doesn't have to be for first time home buyers, although It works really well for some first-time home buyers, but anybody can get it. Um, you know, low down payment, opportunity to roll in closing costs into the price with a seller concession, which up to 6%. If you get that, they'll accept your offer that way.
What's a seller's concession?
Seller concession, yeah, it's an amount that you can ask the seller or include it in your offer to the seller to have them, uh, build closing costs into your purchase price and finance them over time. Essentially, is what happens. So you ask them to cover, let's say you want $10,000 back from them to cover closing costs because you need it. You don't have enough money, or maybe you just want it. You can offer, if you're going to offer them $250 for the house, you can go to $260, $10,000 higher. And at closing, they will give you a $10,000 credit on your closing disclosure to cover, any of your closing costs, right? So it's kind of like when you buy a car, financing in the title, DMV fees, that kind of thing. Similar type of, thing. But you have to ask for it. It's not automatic, right? You
Okay,
have to
great.
ask for it in your offer.
Okay, so what else about the FHA loan?
Yeah, FHA. I mean, FHA will. We have lenders that will go down to 550 on credit score.
Wow.
Technically, it's kind of few and far between that. A credit score that low also has acceptable credit. History,
Right,
because there's two parts of it: the score and then the actual details of the credit.
right,
Sometimes it happens. Maybe they just have thin credit. It's not too bad. A couple blemishes, and they just don't use their credit very much.
right.
So it could just be, inactivity for the low score or something, right? Low credit, challenged credit, within, certain limitations FHA allows. But, you can have perfect credit too, and it works just the same. So FHA is good for people who want to buy a home and renovate, like an FHA 203K renovation loan. So, another thing is if you have an FHA loan and rates go down, from the time you bought the house to, anytime in the future, there's an FHA streamlined refinance too.
Oh, wow. I didn't know that.
Yes, there's a couple of variations of it, but sometimes you don't need an appraisal, and the costs are lower than a purchase. So, there's some benefits to having it, and sometimes they're assumable too down the road, but we don't really see that too much.
And so let's bounce off of that. And I'm going to ask you, what's a USDA loan? Because that's another federal loan. And who should consider a USDA loan?
Yep, USDA, rural housing program. So, if you're looking for a home just, outside of town, around our area, once you leave North Greenbush, Williamsville area, or once you leave Albany on the other side, it's basically a big ring around, the capital district that's ineligible. But anything outside that, they consider it rural, and it's based on basically the population of the area, right? So most of New York geographically is eligible, but it's 100% financing. So
Okay.
you don't necessarily need a down payment, although you can make one if you want. You can't make 20% down on it because then they will disqualify you.
Right.
You
Okay.
can
That
make
makes sense.
20% and pay your closing costs. But 100% financing, get that seller concession that we talked about. Same with FHA. To roll in closing costs. I've had some people not have to, spend a penny at closing with USDA because
I know, which is really good.
financed everything.
Would you consider it a good first-time home buyer product?
It's not just for first-time home buyers.
No, I'm just
Anybody can
saying,
get
would you
it.
consider it that or no?
Oh yeah, I do them all the time. Yep, I just had somebody close on a USDA loan a couple weeks ago, and it's great. You can't make too much money. Like for a household of four around here, the income cap's like 138,000 or so a year, and we have to verify any income earners in the household, right?
Right.
So it's everybody 18 and over of age. But great product. So very similar guideline wise to FHA. It's just you can finance the whole thing. Good rates just like FHA.
Right.
Yeah, you don't have to be a first timer, but you can't own other property when you
Right.
get a USDA loan.
And I just want to jump in, and we're gonna just because we're running out of time, but I want to say, because I know that you are a certified VA loan officer, right?
Certified Veterans Loan Specialist.
All right, certified veterans loan specialist. Hey, I was close. Knew it was certified something with the VA. And so that is so important because I know that you go to conferences once a year, like you're very active in understanding their needs and the process and those kinds of things. And so that's another government loan, but who is able to receive that?
Yeah, VA loan is for eligible veterans who have either had enough service time, whether they're active, the National Guard, the reserves, surviving spouses of deceased veterans. So it's not just your regular guy overseas that can get it. It's people that have had enough time, or the thing that people don't realize is a lot of surviving spouses are eligible for it as well. Their spouses, deceased. So it's a great product as long as they have their entitlement, which is the magic word with the VA from their certificate of eligibility, which we can get. We have access through the VA here. They can finance 100% of the purchase price, just like USDA. And you can finance as many closing costs as you want, really, technically. But
Well, I would tell you, I do get a little frustrated because I have clients that are on VAs and it's like they are given such a bad rap and a negative connotation on my side of things. And I think that that is really, I have literally
yeah, it's
heard
horrible.
listing agents, promote not, advising their clients not to take it. And I just don't understand
Yeah,
it.
veterans are a protected class in New York State, and they should probably be careful.
Yes. Oh, I appreciate you saying that because I think like what a reward. They just risked their lives to protect our
Yeah,
freedoms.
it's not just a loan program; it's an actual benefit, by law
Yeah.
that they have. It's not, it's kind of like, the retirement check. It's actual law that has to go through Congress or whatever to.
Right. And a lot of people should, I'm really glad that you pointed that out. That's totally off my notes. But I'll say, because I'm involved nationally, I know so many realtors, I know so many different state laws and rules and regulations. New York State is the only state that in fair housing has military status as a protected class.
Really.
Yep. From every, and there might be a state out there, but from people I know, it's not, it's not a protected class in their state.
Yeah.
So that's
And the
important to
VA
know.
loan, so it's probably the best loan out there.
It really is.
So
I
if the
mean,
veteran doesn't want it or use it, that's fine, but you got to offer it to them. And some
right.
people don't know that they can even get it. They have never looked into it. They're 7 years old and don't know that they even
No,
have
and the
it.
reality is,
You know?
is a VA lend it is government. I mean, it's a thank you, but it is government like an FHA and USDA. So it just has to follow those parameters, which is health and
Yeah.
safety. I mean, if you're home, if
Well,
you're
it is.
worried about health and safety in your home, then just
Yeah.
state right away that these programs will not be accepted.
Right.
That's the simplest way to do it. But
Yeah.
anyway,
Yeah. Great loan, and that has the VA, kind of like the streamline refi with FHA. The VA has, it's called the EARL, the interest rate reduction refinance loan. Streamline refinance, no appraisal, no income verification. The loan just has to make sense. It has to provide a net tangible benefit to the veteran. And yeah, you can close in like a week or two.
oh wow, that's great.
Yeah.
Do you know of any first-time buyer loans? Because I know you're a broker and you work with like 20 different banks. Is there any banks out there that you work with that offer any first-time home buyer loans? I know a lot of people ask me that, like, what can I get for a first-time home buyer?
Yeah, yeah. I mean, so there's like Fannie Mae and Freddie Mac have their 3% down conventional option, which is for first-time home buyers.
Okay.
And depending on their income, like they have a home ready product and the home possible product, which if you fall below the like 80% of the area median income limit, which
Okay.
around here is like 94,000 a year, for the
Right. I know
qualifying income.
he
You can
does
get like,
that
you know,
too.
it saves you on the loan level price adjustments for the interest rate pricing, which, you know, short and simple, you know, lowers their interest rate at the end of the day. They get a slightly lower interest rate, and the benefit of the 3% down, 3% concession. Um, and there's another program that if you make like less than 50% of the area median income, Freddie Mac is giving like $2,500 towards their closing costs right now.
Oh, wow.
So that could result in either, you know, less money at closing, or what I like to do is, you know, use that towards the interest rate. You know, just apply it to the, you know, the buy down on the rate, which essentially, you know, I have people that got a lot lower rate right now than, you know, the market. So
I know we
very
got to
good.
talk about, but I know we could talk about it all day long, but you talked about a buy down the rate. What does that look like? And does that keep the rate down for the whole term of the loan at that fixed rate?
Yeah, yeah. If it's a, you know, fixed rate mortgage, 30-year fixed, let's say, you can buy your interest rate down. Let's say the going rate is the free, or the going rate is 6.5%. You can buy it down by paying what's called points. You know, 1 point is 1% of the loan amount, right?
Okay.
So you know, it's $100,000 loan, 1% is $1,000. So you could buy it down, let's say, to 6%. You know, for 1 point, or that's, you know, that it's not that, you know,
Right. You're just
I'm
using.
just using that as an example, right? So don't hold me to that. But you know, you can buy it down a certain amount, and it's fixed for, you know, at that rate for the length of the term, unless it's an adjustable rate, which you're buying the initial rate down, you know, to whatever it is, right? And then it can adjust from there. So
Okay.
yeah.
Good information. Thanks for joining me. I know we have to do some things because I said thumbnails
I'm now.
when I do the video, right? Peace out. When I do the video, I do the video edits. I gotta have some time so I can cut them out and post for our thing. I can't stand up. You won't be able to see me. You're standing up in your stand up thing. I don't know. Oh, all right. The Oval Office. Anyway, thanks for tuning in, everybody. We'll see you next time. And I think we're going to wrap up the buying process. We're going to talk about appraisals, what happens during the appraisal, and what could go wrong. We're going to talk about some of that kind of thing and how we fix it, how we can fix it.
There's
So
always a way to fix
for
it.
joining me. Hey, have a great weekend. Happy spring.
Yes, same to you.
Thank
Go
you.
plant that garden.
I know. I just want it to be warm enough so I can clear it out and get it ready. I do have some plants here on my sink. I have my sisters growing the rest of my plants because, you know, I don't have a big enough place. But the next time we go live in our episode 5, I will be live from Cabo.
Ooh, very nice.
Yeah,
I will not be.
I know. So anyway, I might not use a fake background then. Who knows?
Hey,
Anyway,
we'll
hey,
see.
like and
You'll have to tune in
subscribe.
to find out.
Right, like and subscribe. And if there's something that you want to talk about that you know that when we've been talking about already, please leave a comment either in Facebook or on YouTube. You can send either of us a DM. We'd be happy to talk to you and we can meet together. I have a great buyer's guide that walks you through the whole process, and Matt can sit here with you, and I'm sure he has his own, you know, his own I want to say paraphernalia. That's not the right word. Right. But he's got a lot of knowledge, so we can get you on the right track and start getting you ready to buy a home. It takes time, and you know, use real people, not AI, because we'll be able to help you really maneuver and bob and weave through the process. Thanks for joining me, Matto.
All right. Thanks, Janet.
See you
See you next
guys
time.
next time.